and also a very happy Friday. In this session, in which we will be wrapping up the week as well, we are going to consider the overbought scenario we are looking in Nasdaq. This week has been phenomenally good for the equities. We are seeing broad-based rallies in most of the major equity indices, and if we consider the case of MSCI's Asia Pacific index, which excludes Japanese shares, it has rallied more than 7 percentage point in this week, and this is one of the best week, actually the best week since December 2011. So this is the best week in last 9 years. And even if we consider the case of DAX, it is also up by around 8 to 9 percentage point for this week, and is also one of the best week the DAX has seen in years. And of course, not to forget the Nasdaq. Nasdaq has had a phenomenal run over the last 2 months, and now it is sitting almost close to its all-time high, and it's looking like the coronavirus pandemic is not really having a dampening impact on the Nasdaq's bullish sentiments, and what a rally it has been. Whatever the decline which happened after the initial outbreak is now almost evaporated, and we are more likely to see the upside from here onwards than the downside. But still, from near term, from short to medium term perspective, I think now, given the fact that extended rally has already happened, I am kind of in favor of looking for short selling to sideways trend kind of opportunities, as we have seen this rally, and some corrective move shouldn't be ruled out, and rather these are the best level to look for some consolidation moves in which we can try to play scalping kind of trade in a range bound trading environment. Now, coming to the data front, we are scheduled to get the US and Canadian employment data, and here, after a worst month, the month of April, in which we saw the job losses of 20 million, even in the month of May, the expectations are of job losses of 8 million, and here these non-farm payrolls are likely to remain in downward trajectory, and even for next couple of months we are likely to see difficult months in front of job market, on front of job market, and the unemployment rate is likely to rise to the highest level since World War II, and for this month the expectations are of almost 20 percentage point. So these numbers, as bad as they are, still they could have been worse, and from here onwards the market participants expectations are that the worst is kind of behind us, and we are likely to see some uptake from here onwards. That means that the job losses, the rate at which these job losses are happening, is likely to slow down as more and more parts of economy pick up and the coronavirus outbreak subsides. But we are still a couple of months away from that. So let's see how things evolve in next few months. The Canadian scenario is not much different. The only difference is of magnitude, given the fact that Canada is a smaller economy and a less uh, densely populated country. So here, these job losses, the magnitude is likely to be around 0.8 million, and the unemployment rate in Canada as well is expected to rise to almost 15%, and is also the rate which is worse since last financial crisis, and here the prospects are not much different for the Canadian economy. But let's see what impact will show up of the recent measures by the central banks, and of course the federal governments. Now we will consider the technical outlook. Here we will first see the possibility of consolidation happening in the Nasdaq, and then we will move on to the Euro USD, which is seeing phenomenal moves after yesterday's announcement of the extended asset purchase program, the pandemic emergency purchase program (PEPP), in which additional 600 billion euros have been sanctioned by the ECB, and that has propelled the euro to newer highs in the last couple of weeks. Now let's consider the Nasdaq first. This is the daily time frame chart, and here these levels are almost close to the all-time highs here. And even if you consider the yesterday's price move, we saw after the prior highs were tested, we saw this sharp deceleration on the downside, and from those highs, we even saw Nasdaq diving lower to almost close to 2 percentage point. From those lows, it has almost recovered. Now it is just 1 percentage point below its all-time highs and even yesterday's highs. I have actually not looked it into in the minute details if the yesterday's high is is actually higher than the prior high or not. I don't think just couple of points. The difference is kind of minute. There is not much in difference between yesterday's high and the all-time high. So we are pretty much trading on the all-time high, you can say, in a way as well. Now here you can see this rally started around 6,600, and now we are trading above 9,600, and that has happened in just a span of little over 2 months. So the bulls have of course run on the full steam, but I think now, given the fact that rally is losing steam and the gains are becoming more incremental, I think the fatigue is setting in, and from here onwards, we can expect some consolidation to happen in the Nasdaq given the overbought scenario in which the Nasdaq finds itself. So, from that perspective, we can continue to look for some scalping opportunities in which we can try to continue to look for short selling opportunities closer to its recent swing high, and the stop loss can be just little above that. But for that, we also need a significant break on the downside. The momentum should give up, and we should see the momentum on the bearish side setting in. Only then we will feel more confident for us to get involved on the short selling side. If we consider the pivot point series, the price action is still in the bullish phase. Here, the central pivot point is around 9,250, which is almost 4 percentage point from the current levels. So there is no strong bear case for the Nasdaq. The only thing is that we are actually trying to find the scalping kind of opportunity. We are not looking for playing with the trend. We are not convinced, not yet, that the bear case can be made for the Nasdaq. So we have to be cautious while adopting the trading strategy here. And also today's session is the weekend session, and then we will be signing off for next 2 days, and by the time we get back for the trading on Monday, we will have more clarity on the Nasdaq price action front as well. So for today's trading session, we can indeed continue to look for some scalping kind of opportunities closer to the day's high, and yesterday's high can also be utilized as our immediate stop loss. So a stop loss can be kept just little above 9,750, and we can expect a break below this immediate swing low established closer to 9,580. Here I'm not precise. I think the level was close to 9,570, and on the lower side we have these 200 SMA coming into play. So here this swing high established in yesterday's session can be utilized as our marker for determining whether to go long or whether to go short. And as long as the price action remains below this, I think we can indeed try to look for short selling opportunity, and the immediate trading target to get involved for a short sell trade can be between the current price zone, the current valuation of 9,660 to 9,700. So here this is the price band in which we can indeed try to look for short selling opportunities while keeping our stop losses just a little above this, the immediate swing high. And as I said, we can expect the price to dip towards this 200 SMA, which is there around 9,550. But I would like to reiterate, this is not a trade with the trend, and we are simply looking for scalping opportunities here. So accordingly, I would suggest that you keep your lot sizing lower compared to what we do in case of with the trade, as the risk is likely to be higher. And if we see the break below that, below these 200 SMA level, then when there will be more confirming factors in play, we can indeed go in for a fresh position on the lower side as well. But for the time being, let's adopt a cautious approach while dealing with the Nasdaq. Now, considering the case of Euro USD, what a run it has been for the euro after consolidating for almost 1.5 months, closer to 1.08. The light at the end of tunnel is visible for the Euro USD bulls, and it is firmly in saddle for this recent swing high of around 1.15. Even in today's session, we saw a high closer to 1.14 being made. I think the precise high was close to 1.138, and from there on, we are now seeing some corrective momentum setting in. But of course, the underlying momentum is still strong, and given the fact the strong up move in yesterday's session, the case can be made for the Euro USD to add further long trades as long as it is holding on to the decent gains and it is not showing any signs of breaking on the downside. The ATR stands at more than 80 pips and still remains elevated compared to the historical levels. But the thing is, I think on the lower side we have this immediate support around 1.125, and as long as the price is well above that, we can continue to look for buy trades in Euro USD. In today's session, we are seeing this short selling happening after making a high pretty close to the second resistance of this month's pivot point series, and also the run of Euro USD is now almost more than 500 pips, so some sort of correction shouldn't be exactly worrying phenomena, as we are likely to witness such corrective actions and then consolidations even in case the Euro USD is continuing to run higher. So watch out for this price zone of around 1.125. As long as that is intact, I think we can keep our best case for the Euro USD buy trades, the trades in which we will be looking for going long against the USD, and the probability of ending up in profit is still significantly higher. So here the setup is fairly similar to the 4 hourly chart. Here we are utilizing this prior swing high instead of the first resistance zone, which now stands broken and obsolete, so we can utilize this as our next support zone, and the price action is in between these two crucial levels here. And given the fact that the price struggled closer to this second resistance, I think we might see some extended correction and consolidation here, and of course this zone 50 SMA, and then this clear cut marker around 1.125 is going to be the guiding force for our trading decision. And I think as long as the price action remains strong and firmly footed on the bullish side, we can indeed continue to look for long opportunities. Now, the entry point is fairly difficult to be defined at this point in time. We will need some more time. We will need to allow the Euro USD to spend more time, and then whenever the confluence of these SMA and the price action happens, and when we see there is no clear break on the downside below this crucial support zone, then we will have more confidence to go in for a fresh position as well. So let's see how things evolve in today's session during the North American trading hours, and we will have more clarity, a lot more clarity, and the trade setups as well, as we will be back in early hours of Monday's trading session. So that's it from my side for today's trading session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while utilizing the information provided. You can open up a new trading account simply by accessing the link which have been provided just below the webinar's page.